Okay, so breaking news, a US military strike in Venezuela. But let's cut through the noise, right? Forget the 24-hour news cycle. What we're going to do here is a deep dive, a focused financial analysis on what this really means for the commodities that matter, and more importantly, what your next move should be. Look, this is not just another headline that you scroll past. This is a massive geopolitical event, and believe me, it's already sending some serious ripples across the global markets. So in this explainer, we're going to unpack the core investment implications for you. We're talking about how you can actually position your portfolio to navigate this kind of volatility. All right, let's get right into the catalyst, the big event that kicked this whole thing off. We're talking about reports of US military airstrikes hitting Venezuela, which then led to the, really dramatic capture of their president and his wife. This right here is the flashpoint. This is what set everything in motion.
Now, the official story you're going to hear is all about narco-terrorism, a dictatorial regime, all very political stuff. But for any serious investor, and I know that's you, the real story isn't in the press releases, it's in the ground. To truly get a handle on the market impact, we've got to look at the immense, almost unbelievable natural wealth that this country is sitting on.
So let's do just that. Let's start peeling back those layers, okay? Let's figure out what's really at stake here. We're going way beyond the headlines now, down to the hard assets, the physical stuff that is actually driving this international conflict. And it really boils down to two things: oil and gold.
Okay, check out this number. 303 billion. That's not million, that's billion with a B. That's the number of barrels of crude oil just sitting there in Venezuela's proven reserves. Now, to really wrap your head around that, to put it into perspective,
This slide just lays it out perfectly. Look at that comparison. Venezuela has the largest proven oil reserves on the entire planet. We're talking more than Saudi Arabia. Let that sink in for a second. More than Saudi Arabia. That's not just a big deal. That is a complete game changer in the world of energy. But wait, it's not just about the oil. I mean, that would be enough, right? But beyond all that black gold, there's another absolutely critical asset that makes Venezuela such a strategic prize. The country holds the largest gold reserves in all of Latin America. And, in a world that runs on fiat currencies, on paper money, having that much physical gold, well, that is a seriously powerful strategic asset. So when you put it all together, what you're seeing is, well, it's a multi-layered strategic play. It's a geopolitical chessboard. On one level, it's about controlling key commodities, that oil and gold. On another, it's about countering China's growing influence in the region. And then there's the big one. It's about reinforcing the US dollar's dominance. How? By making sure nobody starts trading that oil for gold, bypassing the dollar system entirely. Okay, now let's shift gears a little and look at the corporate angle, because you can't understand the story without it. The history between Venezuela and one particular US corporate giant, well, it adds a whole other critical layer to this thing. It all really kicks off back in 2007. ExxonMobil gets expelled from the country, and that move, man, it sent massive shockwaves through the entire oil industry, and, as we're seeing now, it really set the stage for today's conflict.
and then you get this, a direct warning, issued right before the military action. I mean, read that. It just underscores this incredibly deep connection between corporate interests and foreign policy. It's a really powerful statement when you think about it. It kind of tells you everything you need to know about what the real stakes are here, doesn't it? So with that whole geopolitical stage set, the history, the assets, the warnings, let's turn to what happened in the markets. And honestly, the immediate impact was pretty predictable for anyone who's been watching these things. We saw a massive, massive flight to safety. Yeah, just as you'd expect, right? This kind of instability, it just triggers an immediate reaction. And that reaction is a flight to safety. What does that look like? Well, we saw a huge gap up opening for crude oil, for gold, and for silver. That just means when the markets opened, their prices literally jumped. They opened way higher than where they closed the day before. Why? Because capital was scrambling for a safe place to hide. But here's the key thing to understand. This market reaction, it's not just a short-term blip on the radar. No way. What this does is it reinforces a really powerful, longer-term investment thesis for precious metals. And this is a thesis that we think is going to play out for several years to come. So what happens in moments just like this one? Well, money gets scared. Capital flows out of riskier things like stocks and pours into what we call safe haven assets. And you know the classic examples, of course, gold and silver, they are the original safe havens.
And when we talk about precious metals, let's zoom in on silver for a second, because the case for silver specifically is just exceptionally strong right now. It's really being driven by a perfect storm. You've got intense and growing demand from investors on one side. On the other side, you have mounting supply shortages. Then you throw in export restrictions from big suppliers like China and the US, and on top of all that, its role in new tech is just exploding. So anyone talking about a market crash here is missing these massive fundamental drivers.
Okay, so we've talked gold, we've talked silver, the traditional safe havens. But this kind of environment also shines a big bright light on an emerging opportunity. We're talking about an industrial metal with an absolutely compelling future. And that metal is copper. The demand for copper is just set to explode. And a huge driver of that is the global shift to electric vehicles. I mean, just look at this chart. An EV uses way more copper than a regular gas-powered car. We're talking about a massive, long-term demand story that frankly is still in its very early innings.
All right, so how do you play this? How does a strategic investor navigate this pretty complex environment? Well, it really all comes down to mindset. You have to have a clear, methodical approach, one that's based on data, not on emotion. So let's take an asset like copper. What's the strategy? First, you invest before the crowd. The best time is right now while it's not on everyone's radar as a safe haven. Second, you capitalize on that EV demand. That is your core long-term growth driver. And third, you hold with patience. Look, this isn't a short-term trade. This is a multi-year strategic move. And this right here, this slide just perfectly illustrates that crucial difference in mindset. On one side, you have the reactive trader who panics at every little dip. They're stressed out, they're chasing trends. On the other, you have the strategic investor. They've got a long-term thesis, they're patient, they're confident, they buy when there's fear. That is who wins in this environment. It's about operating with a plan, not with your gut.
You've probably heard this quote before, but it is just so profoundly relevant today. The time to buy is when there's blood in the streets. You know, it reminds us that the biggest, the absolute greatest opportunities are almost always found in moments of maximum fear and uncertainty.
And that really is the final crucial question, isn't it? In a world that just seems to be filled with more and more conflict, with shifting economic power, where do you find true financial safety? What this whole situation shows us is that these big geopolitical events, they aren't just headlines. They are data points for building a smart, robust investment strategy. So the question you have to ask yourself is, how are you positioning your portfolio for a future that is almost certainly going to be defined by this kind of uncertainty?